Crypto is full of sad stories, heartbreak stories, people losing their life savings, chasing the next pump and dump meme coin. That dude who lost, I don't know, hundreds of millions of dollars in his local dump of Bitcoin. Crazy. Everyone loves to post their screenshots bragging about the returns. But very few investors actually end up bringing home the money. Story as old as time. Because the biggest risk in crypto isn't picking the wrong coin. I mean, that's definitely part of the risk too. It's sizing your positions wrong and getting shaken out, or even worse, completely wrecked. So you can have the best performing tokens in your portfolio, but if your stack is too big or too small for your risk tolerance, guess what? You're setting yourself up to either panic sell or miss the moment to bank those profits. So forget the hype, forget the FOMO. We're going to be talking about how much crypto you probably should actually buy, a position you can hold without losing your mind through every single dip and dump in the market. Because guess what? That's the kind of volatility that is very common in crypto. So look, whether you're a passive investor or part-time degen, or this is your full-time obsession, this is your guide to building a portfolio that's going to last and make you life-changing money, okay? But let's get one thing straight. Crypto is not just a hit buy, sit back and profit kind of thing. I mean, you can take the approach with like Bitcoin, but the rest of the market, I don't know. If that's your plan, you're probably going to be struggling. The swings are wild. The only way to survive is by sizing your positions correctly and knowing when to play offense and defense. Even the world's biggest asset manager, BlackRock, is out here telling investors to tread carefully, although they're saying you should definitely be involved. They're suggesting a 1 to 2% allocation to Bitcoin as a reasonable range for most investors. By the way, if everybody has 1 to 2% Bitcoin, prices are going way over $1 million. It'll be nuts. Push it further and Bitcoin's share of your total portfolio risk explodes. 2% in BTC equals 5% of the total risk in a traditional 60-40 portfolio. But double that to 4%, you're staring at a 14% risk tied to one asset. Morningstar suggests holding crypto for at least 10 years if you want the best odds of seeing big returns. But a lot of coins aren't going to last 10 years, are they? No. Bitcoin, yes. Ethereum, yes. Solana, yes. But everything else, let's see. That brings the question in, well, which coins are you going to buy? How much of each one should you buy? That's the part nobody tells you, because here's the harsh truth. It's much more nuanced than just set it and forget it, especially when we're talking about altcoins. It's got to be get it, watch it, get the fuck out. The winners in this game aren't just holding, they're navigating the market cycles. If you invest in crypto like you would in the stock market, you're probably going to lose. And again, with the exception of the few big coins, you can probably just set and forget. Everything else, this applies to. This market has its own set of rules that can be brutal. It's not like investing in stocks. It's not like investing in index funds or bonds or any of that bullshit. Most investors spend their first cycle losing money, their second cycle fixing mistakes, and only by the third cycle, they start really winning big time. I want you to speed run that and get ahead of the game. Now, before we go over the details of exactly how to do that, I want to give a shout out to today's sponsor, TANGEM. This is a wallet. This is crazy. Look at this. Love it. If you want to have military grade security, TANGEM is the easiest and safest way to take full custody of your crypto coins. It's super easy. You just tap this on your phone and you're good to go. It supports thousands of assets, lets you swap, stake, view NFTs all from a single card enabled app. This is insane. No seed phrases. You can get a seed phrase if you want a seed phrase, but no seed phrases. Just tap your card and go. No vulnerabilities, no compromises. This is an insanely cool and simple and cheap, by the way, wallet, and it gets even cheaper. You can get a 10% discount today. Just click the link right down below here. Upgrade to self-custody and do it the easy way. Check it out. Link down below. Thank you for supporting our sponsors, by the way. Guys, look, crypto moves in phases. There's accumulation phases where smart money quietly stacks while most investors get bored and they sell at a loss. Story as old as time. There's bull runs where prices explode higher. Greed takes front and center. Okay, only the experienced players know how to take profits. Most people only come in and buy at the worst possible time when everything's at new all-time highs. And then there's bear markets where the brutal drawdowns crush over leveraged traders. It happens again and again and again. But the prepared hold their core positions. Okay, they deploy fresh capital from past gains in altcoins. They have the money on the side because they took profits. Sometimes the best move is rotating out of certain cryptos entirely and moving into others. If your coin's underperforming, it could be a sign that it will keep underperforming. And one of the most controversial things you can do in crypto is actually to sell for a profit and lock in your gains. Sounds crazy, right? But people will lose their minds if you tell them that. And just wait for the next setup. Be in cash. Be liquid, be free. The real edge in crypto isn't YOLOing into random meme coins. It's knowing where we are in a cycle, adjusting your exposure, and keeping your core Bitcoin stash untouched for the long haul. Can't treat your portfolio like you're just throwing random shit at the wall to see what will stick. This is your money. Treat it seriously. Treat your portfolio like a strategy, not a dartboard. Imagine if you were investing this money on behalf of somebody else, not yourself. You'd probably be even more careful than you are. You'd be sloppy with your own investing, but you shouldn't be. Get this wrong and you end up overexposed and underprepared and emotionally wrecked. It's not a fun place to be. In crypto, the mental game is just as important as the technical one, because if your head isn't right, no allocation strategy will save you. BlackRock's out here telling people 1 to 2% of your portfolio should be in Bitcoin. That's safe, that's conservative, that's don't scare the pension fund version of cryptocurrency investing. And it is designed for institutions and boomers who are getting into crypto but want just a little bit, I'm curious, I want to get some Bitcoin, I don't really know how much. Well, BlackRock says 1%, okay, 1%. They would rather miss the upside than risk bad publicity and take undue amounts of risk. And fair enough, if you're a $10 billion fund, a bad quarter in Bitcoin can get someone fired. But if you're an individual investor with a long-term mindset and a higher risk tolerance, you can be more aggressive. And that's where Bitcoin Financial Services company Unchained comes in with its allocation strategy. So instead of 1 to 2%, which may actually be right for you as an investor, okay, maybe you're the guy who only have 1 or 2% of your money in crypto. Maybe that's Bitcoin and Ethereum and Solana, wherever they get an ETF, and you're done. But these guys are suggesting allocations between 5 and 50% to Bitcoin for investors who understand the asset, who can handle its volatility and are willing to ride multiple market cycles up and down. Unchained breaks down 3 Bitcoin allocation strategies. The first is Bitcoin as an insurance policy, making up to 5% of your total net worth in Bitcoin. We're talking total net worth, not just your crypto portfolio allocation. We're talking total net worth here, okay? Think of it like paying for home insurance. You hope you never need it, but if inflation rises or the financial system breaks, Bitcoin's decentralization and low counterparty risk could just save your butt. The second is Bitcoin as a speculative hedge, making up to 10% of your portfolio net worth in this situation. So if you've got a speculative section in your portfolio, then Bitcoin can slide right in there. By holding 10% in BTC, or perhaps BTC, ETH, and Solana equally weighted, it's enough to matter if the price keeps going up without nuking you if it tanks. The third allocation strategy is an early retirement bet, making up 20 to 50% of your total net worth, which sounds extreme until you understand what Bitcoin actually is. That's a different conversation, I suppose, but these are big numbers here. This is for the high conviction investors to see Bitcoin as the single most asymmetric bet of their lifetime. Literally, the Mexican billionaire Ricardo Salinas has 80% of his money in Bitcoin, and he's considering going 100% Bitcoin, just to give you perspective. If adoption plays out and BTC captures a serious chunk of global value transfer, the returns could be absolutely insane over the long term, but so could the drawdowns. Remember, 50% drops are normal here, so if you have 50% of your money in Bitcoin, that's a 25% hit to your net worth. It's gonna hurt. But when it comes to building your entire crypto portfolio, try to think in levels, from your highest conviction plays to your riskiest bets. Level 1 is Bitcoin only. If you're a completely passive investor and you want exposure to crypto because you heard something about it, the game is simple, okay? Do 1 to 5% in Bitcoin and forget about it, okay? Buy a BlackRock Bitcoin ETF. You get exposure to the asset that's going to give you the most reward for the least amount of risk and most likely to be still here in 10 years with good profits in hand. That's Bitcoin. No need to overcomplicate things. Just stack sats and chill, as we say. Level 2 is just the top 4. So if you want more exposure without going, full degenerate dog coin bullshit, okay, stick with the top dogs, let's say, and that's Bitcoin remaining your core position, but you want to get a little more upside, you want a little more exposure to what's going on in crypto, so you spread your risk out across Ethereum, Solana, and maybe XRP. The key here is to shrink your position sizes the further you move down the list. So Bitcoin is your biggest holding here. Ethereum smaller, Solana maybe smaller than that, maybe XRP smaller than that. So if we're doing 10% portfolio allocations, 5% in Bitcoin and 2% in ETH and a little bit in Solana and XRP, you're weighting by conviction and track record, not just luck. Level 3 becomes the more degenerate portfolio approach, okay? This one's for the time rich and risk hungry. Here's where you sprinkle in some of those high risk plays like other layer ones beyond Ethereum and Solana, some DeFi coins, some dog coins. No, really. Keeping, again, each position between 1 to 5% of your crypto stack, not your total net worth. Okay, we're still looking at 5%, 10% net worth, but total percentage of your crypto stack, small in these high risk plays. These are moonshots, not retirement plans. Play the game, take the profits, never mistake a lucky trade for genius. Okay, this market rewards the fast moving, the open minded. Okay, and you have to understand something very, very simply. When the bull market is on, you might feel like a genius, but I got bad news for you, sunshine. You are not a genius. It's just a bull market. The genius thing in a bull market is to have bought before the bull market really takes off and to sell into the euphoria of the bull market. That's the genius shit, okay? Thanks for watching.